Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Tuesday, February 14th, 2017, and this is the Daily Report for Gold and Silver. In a testimony to the Senate Banking Committee today, Janet Yellen made a couple of statements. The statement she made, in essence, said that every meeting is live, meaning an interest rate hike could take place as early as March, but in any of the subsequent meetings that will go on this year. That sent gyrations really in the gold market. Equities reacted favorably, the dollar reacted favorably, and gold did recover by the close of today's session. Market closed up. Gold closed up today at $1229.30, puts it up about $3.50. Now, the interesting thing is when we look at the lows and the highs, intraday, right as she began to speak, the market actually went to a low of 1222, and traded to a high today of 1236, closing midpoint at around 1230. As I said, a net change of about $3.50 on the day, or about 0.33%. Silver also reacting, but reacting solidly to the upside along with the U.S. equities markets, $17.95, up 12 to 13 cents on the day, net change of 0.75%, low on the day $17.73, and the high $18.09. So traders, as I said, today's testimony did send the market fluttering, did create some gyrations, and actually to view that the best way, let's go ahead and pull up an intraday chart. And so traders, I've done just that. This, of course, is in essence a line chart. We can take a look at how this market traded today. This is the evening, beginning of the 14th, of course, as we witness the market trading at about $12.30 per ounce. It trades up to about $12.34. As I said, in the nighttime session, the market in essence was trading a couple of dollars higher, but then we had this dramatic plunge coming into the market, taking it from $12.35 down to about $12.22. This is based on the close of a 13-minute line chart. I believe the lows was actually more along the lines of $12.22. That's what we're showing for our low today, $12.22.70, and the high $12.36 even. And then slightly recovered as we went into the close, settling a little bit lower, but still settling up about $4 on the day. And so that beckons the question as to whether or not we're seeing some real support in the market, and if we believe this market will return to some sort of a bullish demeanor. Realize we had this incredibly strong rally end of last year, beginning of this year, takes us up to 1220, 38% retracement. Then we get this other rally, which comes to a 0.61% extension of wave one precisely, begins to trade off, and this particular price point here is yet another 38% retracement, and it's a retracement of this smaller move here. So we could in fact have seen some support come in the market. We could be looking at higher pricing from here, but I'm going to need a little bit more time to make that determination feel a little bit more solid than just a one-day wonder. So traders, I did get an email request this morning from one of our describers, Mike, who wanted to really know about the different chart styles that we use. Obviously a new trader and unfamiliar with the difference between maybe a line, a bar, a candlestick, and a Japanese average chart. I wanted to spend a couple of quick moments to go over them with all of you, because my sense is if one asks, there are more out there that really want to know the answer to that question. This is a simple line chart. It's based upon a daily close, and it fixes a dot each day on the close and then draws a line through them. That is all there is to a simple line chart. It is simply a plot of close to close to close to close. Now, the next step from there is a chart that is simply called a bar chart. The bar chart is the basic chart that most Western traders use. And what you're seeing here, let me blow this up just a little bit, is that each hash mark, each line represents 1 day of trading. And on each line, let me pick out a decent one to get to, there's going to be a hash mark to the right and to the left. The hash mark to the left represents the open that the market opened at on that session, meaning today's day. The vertical line represents the distance between the high and the low of that day, and the hash mark to the right of that, simply put, represents the close of that day. Now, what is interesting is that same data can be conveyed in candlestick format, and as you can see, I have just pulled up a candlestick chart, same daily chart in candlestick format. Let me go ahead and highlight one particular candle. The bottom of the rectangle, this represents where the market opened at. The low is represented by the lower wick. The market closes, and that's represented by this upper line right here in the rectangle. And then the high, of course, is represented by this vertical line that comes off of the open. So you have open and close on a up day, and when the market moves down or closes lower that day, you have your open up top and then your close, and that's what gives you the red candle. For information on the Japanese average chart, it's a little bit more complicated. What I suggest you do is please email Conrad, and he'll send you a link to a video that I did a couple of years ago about the Japanese average candles, and that will highlight really all of the different types of charts and really put it into perspective. I hope that answers your question. In other markets that we follow, the Dow Jones Industrial Average closed up almost 0.5% higher on the day at 20,504. That's correct, 20,500 now. The high of the day being right there, 20,504. We closed on the high, and the low, 20,374. So as you can see, we had market gyrations pretty much across the board. Standard & Poor's trading higher, new record high at 2337, as well as the NASDAQ that also closed at a new record high at 5276. And finally, the dollar index closing almost 1/3% higher at 101.22. So in other markets that we do follow, I did want to pull up a US dollar chart on today's show. Now, I do have this in Japanese average format. And the interesting thing is what the Japanese average format does is it in essence filters out the noise in the market. And by virtue of how it's created, and in essence what it is that each candle will begin at the midpoint of the prior candle. If it closes above the midpoint of the prior candle, then it's green, below it's red. So you'll really get a clear indication of uptrends, of downtrends, and then more importantly, you get an indication of strength of trend. And that's what is so dynamic about the Japanese average charts. These long-bodied candles tell you that the trend that's currently exists in that market is strong, intact, and it really conveys higher pricing. As the market begins to run out of steam, you'll tend to get these dojis. Now here it's consolidating, or up here as a defined top, as you can see right in here and down here. So traders, based upon today's action in gold, my sense is we could have, in fact, found potential support. We could see this market move higher from here. If that's the case, our basic model is a wave 1, a wave 2. We're currently in wave 3, but we are now going to be in the 3 of 3, meaning 1, 2, and 3. That would take us higher. We would get a 4th and a 5th, but that's quite possible. However, if the market breaks below 1220, that to me is signaling the fact that this market, in fact, will head lower and probably to the 61% retracement, which I believe from yesterday's study comes in roughly at 1205. This has been Gary Wagner wishing you, as always, good trading. Traders trading multiple positions are still long. Maintain the current long position. Maintain your stop under 1220. For those of us that pulled profits in our single contract traders, this is right where we pulled profits. We are looking for a strategic place to re-enter the market. Have a great day. Bye-bye.